Good morning, all. Welcome to the conference of the results from the third semester of 2025 from Vitia. This is being recorded. The replay can be accessed on the site of the company, where the presentation will be available for download. We inform that all participants will be only watching the video conference during the presentation, and we'll start the Q&A later, when more instructions will be provided. Before continuing, I'll highlight the declarations has base from Vitia and the available information for the company. These declarations can have uncertainties and risks related to future events, so it depends on circumstances that can or not happen. Investors, journalists, and analysts should take into consideration that events related to the event, macroeconomic, can make the results will be materially different from those expressed on the declarations here provided. Wilson Romini, CEO, is presented. Alexandre, CFO, and Edgar Zanotto. Mr. Wilson will start the presentation. You may start now, Wilson. First of all, good morning to all. We are going to present our results from the third semester. That even though the great challenges that we've been facing this moment in Brazilian agro, even the global perspective, Vitia been performing within its criteria, trying to make the best possible to generate aggregate value to all that are involved into the business. So to speak a bit about the highlights from the third semester, we have a generation of cash flow, which is very fundamented, and there are disciplines for credit. And what we've been searching within the company, we had a growth very interesting in soil, almost 33%. We're close to the EBITDA from 33 million, 0.4% related to the third 324. It grew also 5% in 325 million. Our result was 12% superior from the same period as last year. We did all the process, and we rebought again. And the precification of our company, it's out of the norm, and also doing through JCP to our shareholders. EBITDA Mexico, which is a project of ours, that it starts to have a commercialization of a small value from 2025, but a very very high perspective for 2026. 12 registry that are active. We're in the process, keeping the biological products within 6 months period. We're going to have that on our shelves. We see that a project, that a winner project, and at any moment we're launching new products. We have a launching of Tricotribo Turbo exclusive strain, a product that performs better than our previous products. To talk a bit about our performance, I spoke previously. We have an increment from our revenue. You should be seeing the results from other companies in the sector. Not a few companies from the sector are performing on the work that we've been doing. It was a very interesting performance, less than we wanted, but within what's possible on the moment with a given time. With the year, we had a lot of challenges. The producer looking for rationality, trying to equalize their performance. We've been utilizing a mix of products that end up generating a aggregated value a bit smaller, and consequently a brute revenue. But if Vitia has something very interesting because it's a company with a vast portfolio on these difficult moments. It's a company that's able to help the markets what it's looking for. Been seeing that in a very in an insistent way. The rationalization of it started in September of 2023. We had challenges in the agro business. We lived at the 2021, 22, and then things start to change. We understand a clear way that we had to go in inside our structure and to distribute better our expenses with the greatest efficiency. Another point is the related to credit. Agro been going through a tough time with taxes that have been very high, the interest rates. The leverage is very big on the sector. And within NVIDIA, we try to have a discipline which is very intense in this credit scenario. And it ends up being a cash flow more positive. When we talk about risks and opportunities, we live in a scenario very complex. I think that we can have great news for 2026. This is a very good feeling. My feeling, particularly, that it goes among the company, but the challenge is very big. So we're always working to trying to do the best way possible and to believe in what we do. There was a non-definition very big by the producer. Then when we get for the farmers, when we get the three bases of line, we saw everyone want to do a big correction. With the biological parts, it has a growth. And when we get into fertilizers, that are products that are using their leaf, that the farmer, they want to feel a bit more. He wants to know if his crop will develop well, or if it's really going to give what he wants, what he's wishing. So he's going to have a work towards investment in this way. We live in an environment that it's irregular, that the rain are very not it's different from last year and the previous one. So you guys have an idea. I was talking in the region of 163 in Mato Grosso, we have a soy with 5 days and five with already with 50 days. So you see the irregularity. You see the time of plantings and over 40 days. We have opportunities working in an intense way related to innovation. We have the launch of Triumph. This product we're able to put in a lot of places in Brazil. And next year, because of the performance, we're going to have a sale that it's very interesting. We did the innovations on Bovaria, at the Turbo and Tricho Turbo to bringing products with more efficiency. Talk about our positioning, the discipline. It's constant related to the credit work. We're every moment next to the farmer in a place that we never stopped investing. It was in the commercial network, bringing people that were trained with greater experience, trying to be next to the producer, to look for new technologies and greater productivity. We have an evolution, constant evolution, like we said, on the solutions, biological solutions, a lot of things that are being developed within our PDI. Like we said, we have a portfolio that is very complete. And in these moments, at these times, it helps us go through these moments and when things will change. That will be better in the way that we imagine. The company will be very well prepared to shine in the scenario that's more favorable. So, Friso, now it's your turn now. Thank you, Wilson. Good morning to all. I'll go into the detail of the performances by line of business and the development of financial development, starting of the revenue liquid. We, we started very interesting on the fertilizer with a mix of factors helping with the performance to be positive. A line that had a positive impact on price. We had a greater demand because of technology of microsoil and a gain of market share, combination of these three factors to have a greater performance on the trimester and accumulated throughout the year. So we go into this biological solutions and natural ones. We have a positive trimester, not as we would like to, but we grew 12.6%, going a year on a small growth. We believe that the market it's a important level of delay, and with more intensity on the foliage that we're going to speak later on, impacting on the biological solutions and natural ones, that it performs better, mainly to the demand of this kind of technology and the launching of that we've been doing throughout the year that have been helping the performance of the line. And we had a growth, even though on a trimester that was delayed in a difficult year. Now the foliar fertilizer industrial products, we were a bit negative. Started a rough year. We had a farmer that had a margin, a narrow margin, that is leaving the technology from foliar for the last moment. So it means that there's a delay because of that, important. But we don't know what are the intensity of the use of the technology in this scenario. Even though we think that the delay will recompose itself, but we don't know if the producer used the technology and the intensity that they used on the last couple of years. And we've seen that with the diminishing of the technology related to risks. When you see under this line, we see worse mix related to the other years with the greater demand for older technologies, consequently, with a less value, which it was aggregated. Now going to the next slide. As a result, the gross profits and gross margin by segment. The microsoil performed better than the other ones. From 28%. But when we look each of these lines, we see that the scenario it's challenging for all the lines. For fertilizer, soil fertilizer, we had a stability, but the margin was straight margin, narrow margin. It's characteristic from that line, but the other lines, we had a little bit of loss from the margin that we considered positive in a way, given the scenario of this year. So a very tough year with some technologies with this pressure towards price, and we've been working in the part of cost reduction to try to deal with. We're not able to gain on the commercial part. Going to the next slide now. And related to the selling, general, and administrative expenses, we see that we go in this strategy to search for efficiency, trying to able to deliver a performance within what is expected, because it's easier, which is to be completely under our control. The important thing to comment that this trimester, there was a factor, extraordinary, that impacts as a whole, generated some just lines, and the unity of pathogenesis of mineral organic. It was a project. It's a project that we believed that we ended up having some delays on this project related to market and also related to integration of this technology within the group. and we weren't able to have the performance that we wanted, but we understand that the short term, we weren't able to revert to this scenario, to go back on this and this technology and this unity from our place from Pato de Minas, and we ended up ending in Pato de Minas to focus on the lines that were promised that we have within the company, and to end this part in Pato de Minas on a point of view of that we had a land that was rented, that we did some good things, and we know won't, and we were able to refer to go back that again to get that back. So, and then regular expenses like with people, transportation, well, we had to dismantle to bring to our branch in Serrana of our mineral organic. Remember that is still on our portfolio, but now it's focused on our technology. The historic that it's based on Turfo. With Pato de Minas, we're used to use the cow bed. We still keep the portfolio of organic mineral, but it's more focused on our original technology. And of course, less investments and focus what we had when we started this project. That was through the acquisition of the company of Vitória Fertilizers. And not considering these factors, we had a SG&A a little bit lower than the same period from last year. And throughout the year, we're a bit lower, but it's not what we wait for the end of the year. We had a factor of if this reversal, if we won this factor, we were had a small growth on the trimester, and probably performance, a stable performance. But today, we comment we don't have we no longer have the strategy reduction strategy of expenses and structure like we had beginning on October, November of 2023, and along throughout the year of 2024, that it resulted in some economies on the last trimesters. So the expectancy now and our strategy is to have things very controlled without reductions. Now related to this, to the economy, we're able to keep this EBITDA very close. Even related to growth, that had a small margin. We had a small loss, a couple of percentages. So related to CapEx, we don't have no news. Our strategy was to invest with smaller investments. We focus on efficiency, operational efficiency, and we're able to fulfill this strategy. Been performing lower than last year, 7.7% smaller. The only investment that was more expressive, it was on the plants of typical defensives, on our typical pesticides. That we did 4.2 million of total of 7.3 million planned for 2025. We were able to adjust the estimates. It was and 10 millions we were able to adjust. So we focused on the part of efficiency, operational efficiency, that a greater compensation related to cost. And here it's the highlight, positive highlight. We've been performing the last trimesters, the cash flow management and our financial discipline. We had a generation cash flow positive on the trimester in this year with a growth, relevant growth related to the same period of last year, based on our discipline related to credits concession and the injection of cash flow. You know, the agronomist, it's a lot challenging related to the aspect of credit. And this work, it's not the results of the year, it's a result of our managements within the cycle of a couple of years. We don't make this happen from day to night, from day to the other. And having now we're harvesting the crops from the periods with greatest euphoria, a level that it's very controlled of. Consequently, with a leverage, very controlled leverage, and we closed the 9 months from 2025 with 0.9 with dividends, even consider a payment of buyback program over 40 million. We see very conservative in this scenario, and we're taking benefits with a cheap credit, and we're able to get with even cheaper considering to the previous years. We understand that the company has a position that it's privileged in this market, which is a point of view to capitalization, and we're very calm related to that aspect. And we're able to keep our plans and our strategic commercial strategy without having to do any kind of adjustments or a matter of it's been very like you guys know this agro has been going through a rough time now related to distribution and company also related to liquidity. With the financial results, the performance was slightly greater than last year. The main factor here was the AVP that goes into a financial results with the capital costs going up, and it automatically goes up in comparison to the annual results. And IR and then social contribution, it's a factor that's more seasonal. It's much more superior than last year that we recognize the JCP. We had the declaration of 2 JCPs, intermediate ones, on the third trimester of 2025. On the counterpart, comparing to 2024, when we declared all JCP only on the fourth trimester, the fourth quarter. So we'll equalize the fiscal results from the years will be similar, not like now that we have a performance that it's substantially better. And last, with the net profit and net margin, we had on the quarter a result that was adjusted for demobilization. The results that usually greater than the previous trimester from 2024 and accumulated throughout the year. We have a result that it's mainly stable. Now, Edgar will speak to the launching of the Trico Turbo and the innovation part. Good morning, everyone. Thank you for being here to see our live. Like we said, I keep on talking that the last live that we had, the results, that this year we had some bit more products related to have a better portfolio, to products that to substitute things that have been going on. The launching that we had recent was the Trico Turbo OD, which is a fungicide. It's a bit more stronger. We have a greater capacity of manufacture and a productive capacity, a greater one. We have better protection, a formulation, the quality, it's differentiated better. It's one more product. We have the Meta Turbo Max and Bromelia Turbo WP recently. Now we have the launch of Trico Turbo OD, completing 4 launches this year, counting with Triumph, which is the greatest launch of the year. Can go to the next slide, please. The investments that we have in our innovations, they're still very stable. We're not cutting investments in this line, in this part. When we see reduction, it's related to CapEx when we did the investments on the previous years, and it's not a matter of cut or reduction. There's no necessity for the CapEx now, and the investments in biological products for new technologies and fertilizer, we're keeping the same level of investments. We completed 4 new registries this year, another product that they were able to. More recommendations from biological parts with these registries of new products that were able to use all the cultures that would start to aggregate new recommendations to use it. And something that's very important to say, it's Mexico. Mexico, we have 12 products registered there. We started commercialization active on there, and we have a great expectancy there with a lot of good partnerships in the next year, 2026. So this is it. Thank you very much, Edgar. Talk about a point of view of market, capital market, stock market. We're still suffering from the perspective, strong related to the agro business, with our stock market are still not performing within our expectancy, with the gap close. So because of that, we're still active in the rebuying program. We have a 3.4 million that we bought again. We had the end of the fourth program with the canceling of 3 million stock market that were in the treasury, 3 million shares held in treasury, and we will do a fifth share buyback program. Number of shares to be acquired up to 4.5 million reais. We're still going to be keeping within the strategy that we've been commenting the last quarters to take advantage of these opportunities, but always in a gradual way. So the buyback program is another strategy that we wanted to do, but given this difference between the value of our shares, we felt in the obligation to do these investments to end up being the best allocation with the shares within the base, but always doing in a gradual way. We're all having to have any kind of impact in terms of prices, diversification of markets. Now we believe we can start in the Q&A. We're going to start a Q&A for analysts and investors. If you wish to do a question, click on raise your hand on the inferior parts of the screen. Our first question comes from Pedro Fonseca from XP. Good morning, Wilson. Good morning, Frieza Edgar. 2 points that I'd like to explore with you guys. First, related to the evolution of the shares of the sector, the wallets impacting of the whole sector with the delay. So I'd like to do how you guys see all this evolution throughout the Q4, and particularly I'd like to listen to the use related to the foliar use, the line of business that maybe it's a bit more behind, but that's the first point. The second point is I'd like to listen from you guys how you guys are seeing the condition, financial condition, and health related to the farmers and producers, and a great bank that has a great exposition to the agro and is reporting a greater loss without the players without with the faults, without the brokerage of the harvest. If you guys think with those players, with the inputs, if the worst has passed already, or if this is the moment to be cautious. Maybe we cannot be so aggressive, a growth of number of clients, etc. So this is my 2 points. Thank you very much. Good morning, Pedro. How are you? I'll start here. I'll highlight, if Frieza wants to highlight something else, it's interesting. So the matter of the evolution, we have now a Wallace portfolio that it's bigger compared to last year. It has some matters that has to be evaluated. It will depend on the rain, the stabilization, but it's a firm portfolio. So that's something, that's what I can say. It's robust enough. Now market, it's the market, This year we think in a way, next year we think in a different way. The person that puts and things from the world into his life is completely wrong. So things that we're doing today, this moment, we're going to do different tomorrow. So the portfolio, it's a greater portfolio than the same period of last year. Related to foliar, as I spoken previously, we had a year that was very interesting. The sale of the soil related products, fertilizers, soil fertilizers. I think this is in a point that we have a competition, very big competition. We have good partners in this way. The producer, farmer did this investment. Now this is something that's rising. This is perception of this technology and looking for this greater productivity. And of course, we end up getting some things related to the work. So I have no doubt about that. So when we speak about the fertilizers, foliar fertilizers, what does the producer, the farmer is thinking? He wants to see, like I said the previous year, you get Mato Grosso 163. We said we see soy sprouted with 5 and 50 days. So what is the producer thinking, the farmer, in a more complex situation, being more rational possible, is do the spraying in the right moment. He'll see if his crop or his harvest they will need, if the rain will fall, if I have a good formation, and he will do. What can he do is to exchange the mix in terms of technology. When talk about foliar fertilizers, specialties, you see effectively a lot of ways, sulfates, nitrates. You see all the products about the concentrated suspensions and then carbonates. And automatically the producer, the farmer is migrating to products with a less value, aggregated value. But we understand that the markets have a normalization related to the climate. He will consume. He'll consume. That I have no doubt about that. We don't see expectancy, a great expectancy to reach December 30th with a number that is so interesting and related to this line. Now we are searching for going to other markets, other cultures, so we can perform in a more interesting way. And you asked already, you also asked, I saw this related to the bank. It didn't end. What you said about the bank, it's not over yet. There's a lot of challenges up front. The leverage is very big. The interest rates are out there. We're listening all the time. There's not expectancy that of a fall of the interest rates, a drop. And there's a lot of things to go on before we can reach a proper conclusion. So this is our understanding, Pedro. The market, it's very dynamic. When you hear, I'm over 30 years in the agro business. We've never seen a process that it's very and related to difficulty, but things changed, and I think it will change. It's a matter of diminishing the lowering of the productivity in Brazil. We're a bit delayed related to the planting of soy. We're going to have a smaller area related to corn. The global consumption of protein is getting higher day by day. We see all the evaluations that we're going to be producing. It's not going to be on the same level of stock compared to next year. So good news will come. So we're very conservative, and that's why we're presenting the results. It's not what we wanted, but we're showing a result. I think it's very within our conservative way. Okay, thank you, Wilson. Thank you for going deep into the answer. just making sure so you believe that we're able to have a reduction of area, correct? I think we will have it because we having the soy planting very delayed last year. We have a climate regime very satisfactory, and even this window was very ideal for the planting of the corn. And we got out of this window, this ideal window in some regions already. So we understand the producer that will put put all this thing. The products will use a product with less potential, so it will have a less production of the harvesting. So I have no doubt about that. Thank you, Wilson, very much. Our next question comes from Bruno Tomazito from Itaú BBA. Good morning, Wilson, Friso. Friso, on the previous comments, they had happened with the frequency that this appetite a little less related to this macro, it's more challenging. I heard some commentary from other parts of the sector, and the discussion related to precipitation, it showed more frequent numbers. And other forums also like to understand if in fact it's the greatest bothering. How do you compare this dynamic of mix with this medium price on the same base? If I'm not mistaken, I had last area to go with a smaller price. I'd like to understand if this is kept for the moment. What do you guys think that you have space to happen in the precipitation in 2026? And related to margin, Vinicius commented that there was this important change, getting more share in the soil related to foliar use, but also this dynamic of margin compression and the unities and the branches individually. When on Q4 2026, we have the expectancy that we have a return of the foliar, that we understand that mix will be a beneficial point of Q4. The question is to how do you compare from now on this mix that can do better with these environments that it's a bit weaker with margins? How to compare these two factors with the foliar being heavier than a 4? Thank you. Okay, so I'll start and you complement. So at the end, Bruno, yes, we we're waiting on the fourth quarter last year, the beginning of next year, we have a better performance on foliar part and this acceleration of the soil. Micro soil, it's for planting. So we cannot expect that to keep the same demand at the end of the year and at the beginning of the next year. So we wait this renewal. We have a certain difficulty to understand what would be the level of demand, even though with the renewal of this delayed recuperation with cost cutting, a reduction of rentability that it's awaited for this harvesting, and producers doing something very similar, primer, like similar, they have a small revenue, so have to have a smaller cost. Of course, in this case, there's a little bit more complex. Sometimes you have a smaller cost and smaller productivity. So these things are linked. So it's very challenging. But we've been seeing this kind of behavior. So I think more of resources than productivity this year. So this is the behavior, the dynamic for the harvest, but with the delayed, yes. And wait for this mix on the fourth quarter and the first quarter of next year. That's part of the harvesting 2025-26. So in 2026, we have this price drop. In 2023-24, the substantial price drops, but we see an environment that it's very challenging. We still see some kind of price drops and seeing some stability. So this is a point of view of the industries. related to agricultural imports that we see some things getting out of the market and environments that it's normalizing. And related to the inputs, we haven't seen companies getting out of the market. We see a lot of companies going in the market, so a level of reduction of rentability, drastic one. We see a lot of companies that are facing challenges, financial challenges related to this scenario. So it's natural if this scenario, if it persists, this challenging scenario. So the price can always drop more. We can't say that it won't, but like I said, without any doubts related to price, the worst has passed already. That's our vision. And if Wilson wants to complement, think, I think you're very complete on your answer. That's a feeling that we have here. There's nothing else to add to your answer. Okay, excellent. Thank you very much, folks. Our next question comes from Pedro Grama, side from Citi. Wilson Friso, good morning. Thank you for the Q&As. I have two questions. First, I'd like to ask related to this difficult market in the agro, interesting point that you guys mentioned. The company were able to deal well with the cash flow, and it seems like it's with the less necessity of cash flow in a way. I'd like to understand of the measures that the company are able to take in this very hard scenario related to cash flow. It's explained through the level of sales. And the second question is, I'd like to hear a bit about the new products and the knowledge of you guys. And there's two. First, I'd like to listen. How's been the development of Triumph that has been waiting for the launching of the products? And I've seen that you guys launched 3 new products in this release. I'd like to understand what's the focus of these new products. It's to reach other cultures beyond soy and corn, like sugarcane, coffee, or these products still going to answer some of the demand, most of the demand of soy and corn? That's it, my question. Thank you. Please, if you like to speak about the cash flow generating, then we speak later about the products. Okay, point of view of cash flow, it's a mix. We've been doing our work here, the point of view of management of cash flow, looking at the stocks, related to working capital, and that it works with a shorter period. And we have this policy. We could have a policy with more extended dates, but we have this to work with shorter period of time due to rentability and because of the profile of this kind of product. So it's a mix of both things related to generation and something natural that has to do with our business. When we grow a bit more, we generate less cash flow because we have a necessity. We have less necessity of reinvestments and working capital and cash flow. And then we're more stable. We generate less working capital, cash flow. Related to sales, we'll be generating a little bit more sales with the cash flow of stocks. So it's a mix. We were commenting the demobilization of Patos and Minas because we had a very important level of stock in this line for mineral organic and Patos. So we're done with that. So it's a mix of everything. So in the other questions related to launching, maybe Wilson should say, or Edgar. Okay, the first case is Triumph. Pedro, Triumph is within our expectancy for throughout the year that we programmed of sales. But the matter of results and field, we're starting to do the applications now. It's a product mainly for soy, for roasting. We're starting the first applications of Triumph. So the client believes that the year of Triumph, it's next year. the launching, the greater volume, within the results, but the results from field are only beginning next year. When we talk about launching of the products itself, we have other three products, biological defenses, two insecticides, and one fungicide, are products that are to better performance of our portfolio on the cultures that we've been working. Products that substitute the products that existed. Well, Potobordeta, substitute Tricoturbo and Metaturbo Max, substituted the Metaturbo, and from there on. So we're searching for products with greater efficiency that would be more with more productivity related to our industry, and that's what I've been searching. So bring more stability for the producer in these launchings. But for the next launchings, I'll just complement the products that I've ever heard of that they take longer, that we have new microorganisms to be launched to other uses or more efficient that we have now. And this takes a longer time because our products that are disruptive products, that takes longer time for us to get the proper registry. As you guys are aware, we have microorganisms in our collection that are very efficient. That first, that never been talked about Brazil. We're doing the scientific community talk about this microorganism in Brazil. Later, we do monography to put this to the registry, and that's why it takes longer. But we have a lot of things for the future, some closer and some a little bit more far away. The expectancy. Okay, thank you guys. Just a reminder, you just click on the raise your hand on the button or on the Q&A on the chat to answer to a question. Next question from Gustavo Torres. He asked, the biological market is very competitive. Traditional chemical companies are exposing this chemical parts. How do you competitiveness and how do you guys position yourself related to the competition? Does an agro towards the fruits and corn and avocado, and where do you guys pretend to work on? Yes, for a little bit more details of the operation in Mexico, sales potential and sales potential to the US, etc. Okay, let me answer here the matter of the biological part. Then Edgar goes with the related to the Mexico part. Will speak better to you guys. The scenario is important when you go into this biological world, something new that we have within our time and in our work, when it's being born, we have from 7 to 10 years. So there's a lot of adventure in the market. There's a lot of companies or entrepreneurs that thought there was something very beneficial key, gold key, a very big challenge to produce biologicals. It's no joke. We had the in-farm wave, and this wave is diminishing. We see big companies that thought about it to produce this, and they threw their towel already. They gave up, and the big companies like Syngenta, Bayer, BASF, North Corteva, everyone is going after this market, which you see in a very clear way that our products have biodefensive. They're so efficient, or more efficient than the chemical defenses. We have a program from Biovicia. We have Labora 100% biological. I think about how to deal with this related to the management. That's the way. Maybe in the future things will be a bit different. You know, the chemical product it builds up resistance, and the biological product doesn't build resistance. So we see these movements of these big companies, they will go into this market. Now, there's a very important point here when we talk about these big companies. These companies, they have a commercial policy. They have a big worry related to to the quality of the product, and I have no questions that it's very good to compete with them instead of to compete with companies that they're just going now at the markets. They don't even know what they're doing. That's the truth. We don't see this as a point of great challenge. And we're at every given moment, let's say, trying to search with NVIDIA so you guys can have an idea. We have a PDI that's particularly hard to have, not only in Brazil, but outside, overseas. We have a genetic bank, very big one, huge one. Edgar just mentioned that we're in the tip of the iceberg. We have things that are more efficient within our bank, but it takes time. So these things that they're not even know that we're going to have to develop the literature of all these products. So Vici is very well prepared these trains. With all this regulatory process, it demands time. So we're going to work as we can. And within the matter of rationalization, the money here, it's not infinite. It's now we do the proper ways to do in all the company sector to understand what will give the biggest yield to talk in a very clear way to you. So the matter of Vidia Mexico, Edgar, he's more aware of the subject. Thank you, Will. Vidia Mexico. It's really, I'll start as Gustavo Torres mentioned, it's agro that's goes towards fruits and vegetables with even though corn is a bit lower, even though it's the greatest one, we're focused on the structure that with a more aggregated value. So all of them, since some from nuts, that's very strong. The area of berries as a whole, strawberry, blueberry, all kind of berries, etc. And we're also working with beans, avocado, apples. So we started strong work with our branch here that we started in Chihuahua in the north of Mexico. Because of that, we started to development that it's closer there. But now we have people working the central part of close to Sinaloa, Baja California, Guadalajara, with over 7 people there working for a time already, for a period of time. So towards sale, we imagine that next year we'll start in a stronger way in these regions. We started first the work, more objective, but but it's to help Mexico as a whole with partnerships to distribution. It's a market that's a bit different than in Brazil. The direct sale, it's not so big. There's not so big areas like we have in Brazil. So we've been looking for good distributions and partnerships in Mexico. The scenario, thinking about, I've been there a couple of times, and the biological for Mexico has a lot more products that I had for Brazil that I had 15 years ago, but the technical knowledge and the quality of products there, it's what we had like 15 years ago in Brazil. So that's why we're able to have a strong and fast growth and to help people related to the technical knowledge and how to use it. People are very freely to use and safe, but they're not, but they have this disbelief. Like we used to listen in Brazil, like when we started to work with these biological issues, of like 8 years, oh, I worked, but it didn't work. I worked, but I don't believe. It's because everyone had bad experiences with other products, similar biological products. But we're going to have a very strong growth in Mexico, and it could be a reference in some moment. I think that's it. That's for possibility to go to the U.S. market if it exists, of course. It's Mexico. It's already a U.S. farm. It's next to it. You know, there's the frontier, the border. California may be the next step for us because there's cultivation of these veggies and fruits and veggies that are very strong. Then when we go there, we have a project of internationalization also for all the rest of Latin America that we're discussing nowadays related to registries and all the costs and etc. to do a estimate to follow on these other countries. Okay, so now the Q&A is over. I'd like to give the floor to Wilson to give the final considerations of the company. Okay, first of all, thank you very much for you guys being here, listening to us, listening to our company. I think the central point here that I like to leave in the point of view of Market Video is a company that it's over 50 years in the market. So that's for no reason. I see in a very clear way, and all the people here on the administrative parts and related with the compromise with our history, working on the same sense, have the clear perception that we live in a market that has ups and downs, and we see this in a very lucid way, very clear way, that the policies that we adopted to this path throughout this 50 years, over 50 years, it's being favorable for the company. So that's what we believe. This is what we've been doing. And of course, better days are very short now, and they will show up, and we're gonna be there taking advantage of these better days. Thank you all. So now it's over, our conference, and we'll have other channels available to questions, Q&A. Thank you all for participating, and may you all have a good morning.